All right, looking at the software company Gitlab, it is down 11% here in the pre-market. And even before this, it was down 29% year to date. So Gitlab delivered a beat this morning on both the top and bottom lines. It also announced a $400 million stock buyback plan. But what's got investors all shook up is the outlook that is sort of tempering the enthusiasm around Gitlab. Its forecast for 2027 adjusted earnings per share falling short of estimates. And really, this is just feeding the greater fears around software, right? These software companies being dented by the possibility that artificial intelligence is going to take a big slice of their business. And I think we're seeing it play out here in Gitlab. Bloomberg Intelligence has some commentary out today. It says the outlook at Gitlab reinforces our cautious view that the growth runway for per-user models is narrowing amid intensifying competition and AI disruption.
So that's what I'm learning from reading a lot of stuff. This per-user software model,
that's an important number.
That's the one that is at risk, as opposed to the enterprise software, where it's really embedded into the full operations of a company, like a Salesforce.com or something.
Exactly.
So that's kind of what I'm learning as I read more and more of the research coming off of Wall Street about the risk to software from AI.
And this stock has really been struggling. I mean, let's take a look at the share action on a year-to-date basis. Stock is down about 29% so far this year.
All right, interesting stuff. All right, Abercrombie and Fitch.
Yeah, it's a big week for retailers.
It is,
because of course the news, of course, the overriding news is what's happening in the Middle East. So all of these earnings reports from the retailers sort of getting lost in the sauce. But Abercrombie out this morning, record sales for the fourth quarter. So people were out there buying during the holidays, but it's its outlook that's overshadowing that record performance. We've got shares of Abercrombie and Fitch now down about 4%. Taking a look at the year to date here, down 21%. So it's been a rough go. The clothing retailer reporting better than expected results, but guided for a greater tariff impact going forward and a slowdown in sales growth in the company's current fiscal year. You know, we hadn't been hearing a lot about tariffs during these earnings reports. I feel like it's starting again.
It's starting again. And I think, we'll start lapping them, I guess, second quarter-ish, second calendar quarter of this year, because we figure they started being implemented sometime April, May, June of last year. So maybe the comps will get a little easier for some of these companies, particularly the retailers. But yeah, they're still calling out the tariff impact. They can quantify it, a lot of these companies.
Right. And what stands out to me is this headline crossing the Bloomberg terminal about 3 minutes ago, saying that Abercrombie sees a small sales headwind from the Middle East conflict. So that also adding on to the other tariff concerns.
I wonder if that's because, are they global, or are they concerned about getting product?
So I think it's probably some consumer confidence maybe just impacting it.
Exactly.
But it just, the tariff issue just goes to who's bearing the cost of the tariff. Well, it's either the companies, the importers, the consumers, and that's what the Fed paper from a couple of weeks ago, the New York Fed paper said 90% of the tariff costs are being borne by the U.S. economy. ROST stores.
Yeah, so it's interesting because retailer to retailer, you can get a very different picture, right? So I think it's a very individual situation for these retailers, because ROST stores up 6.3% here ahead of the bell. Year to date, this stock has been up 10%. It's an off-price apparel company. So again, we're talking about discount, not just apparel, home accessories as well. Comparable sales growth for the fourth quarter, 9%, easily beating the consensus. And they're also seeing a lot of momentum in this quarter. The management stating it has been very encouraged by the strong start to the spring season. Of course, you got the Easter holiday coming up and what have you. So ROST stores, one of the bright spots here. We're going to hear from Gap and Macy's, also Costco, before the week is through. So we'll get a better feel for, how consumers are spending their money and where they're spending it. Also, just want to very quickly point out Target, because it's up about 1% here in the pre-market. It had another sluggish quarter of results. We know it's trying to turn things around. CEO, they have a new CEO. He came out today and said, we have a $6 billion plan to redo it. So they're throwing a lot at this restructuring, and we'll see if that's going to work. They're going to implement some tech in the stores, trying to turn things around at Target.